So, what if I told you that one of the oldest industries on the entire planet, an industry built on centuries of tradition, is right now in the middle of a quiet revolution? We're talking about insurance, and the force that's shaking everything up is technology. And look, this isn't just about slick new apps or websites. We're talking about a fundamental rewriting of how we even think about risk, all powered by data.
To really get your head around the scale of this, you have to understand just how massive this industry is. Back in 2017, the global insurance market was worth almost $5 trillion. I mean, that's bigger than the entire economy of Japan. It's this massive, sleeping giant that honestly has been doing things pretty much the same way for decades.
So, what's waking the giant up? It's a little thing called Insurtech. Now that might sound like just another buzzword, but this definition from SIA Partners gets it right. Put simply, it's any company using tech to shake up the insurance world. It's not just about flashy startups, it's about making every single part of the process better, from how you price risk all the way to how you pay out claims.
Okay, so if Insurtech is the movement, what's the engine that's actually driving it? Well, at its core, this whole revolution is being powered by one of the most transformative technologies of our time, artificial intelligence.
You know, we throw the term AI around all the time, right? But for Insurtech, the real magic is happening in a specific area called machine learning. Think of it like this. Traditional AI is like a master chef who follows a complicated recipe to perfection. But machine learning, that's like a chef who can taste thousands of different ingredients and invent a brand new, incredible recipe from scratch. It doesn't just follow the rules, it actually discovers hidden patterns in huge amounts of data. So how does this actually play out in the real world? Well, get this. Most insurance companies are sitting on these gigantic mountains of data, but they only ever use about 10 to 15% of it. Machine learning is the key that unlocks the other 85%. It lets them predict future losses with unbelievable accuracy, set prices based on real-time demand, and even spot fraud patterns that are so sneaky no human would ever catch them. It's even changing customer service. You've got chatbots like Allstate's AB that can answer policy questions in an instant. But look, this is way bigger than just adopting a few new tools. Technology is fundamentally rewiring the entire insurance process, from the very first moment a product is designed to the final moment a claim gets paid. Just think about the old way of doing things, right? Slow, tons of paperwork, and you never really knew what was going on. Now, look at how tech just flips that on its head. Products are no longer one size fits all. They can be personalized just for you. Sales are smarter. Underwriting, which used to take weeks, can now happen in minutes with automated data. And for you, the customer, the whole experience is just better. Instant access, automated reminders, and a claims process that's actually fast and transparent.
This massive technological shift didn't just force the old companies to change their ways, it basically opened the floodgates for a whole new ecosystem of startups and innovators to rush in and fill the gaps.
But let's be honest, this new landscape can be a little confusing. I mean, with all these new companies popping up, how do you tell them apart? What role is each one actually playing in this new world?
Well, the Milken Institute gives us a really straightforward way to think about it. You just ask a few simple questions. First, is the company taking on the financial risk itself? If the answer is yes, boom, it's an insurer. If not, okay, next question. Does it work with just one insurance provider? If yes, it's an agent. If it works with a bunch of them, it's a broker. It's a really clean way to cut through all the noise. But if you want to get a little more nuanced, Capgemini breaks the ecosystem down into three main roles. First, you have the full carriers, like Zhong'an. These guys are building entirely new insurance companies from the ground up. Then you've got the distributors, like Policy Bazaar, who are focused on creating modern, easy-to-use marketplaces to sell policies. And then, and this is crucial, you have the enablers, like Risk Genius. They're not insurers at all. They're the ones providing the powerful tech that the rest of the industry runs on.
And what's so fascinating is how all this tech allows for a complete rethinking of what insurance can even be. Instead of a fixed annual contract, why not have insurance you can just turn on and off for a specific trip or an event? Or what about insurance that's priced not on your age or zip code, but on your actual behavior? That's what Metromile does. You literally only pay for the miles you drive. It's a huge shift from one size fits all to insurance that's built for one.
Now, all of this innovation has, you guessed it, attracted a massive wave of investment. But the story here isn't just about the money. It's also about a pretty surprising social mission that's emerging.
And yeah, the money definitely followed the innovation.
Just look at this growth. Private investment more than tripled in just 5 years. But the really telling detail isn't just how much money, it's who is investing. A huge chunk of this cash is coming from the traditional insurance giants themselves. So this isn't some classic scrappy startup versus the old guard story. Nope. The old guard is actually funding its own revolution.
But is that all this is? Is this just another tech disruption story about making a ton of money? Or is there maybe something more happening here?
And this, for me, is where the story gets really powerful. For decades, traditional insurance was just way too expensive and complicated for billions of low-income people around the world. Insurtech is changing that by making a whole new category possible, microinsurance. And it's exactly what it sounds like, small, affordable insurance products designed for people who have been completely shut out of the system.
A perfect example of this is a company called Bima. They're using the most basic mobile phone technology to reach 26 million people in 15 different countries. Through a simple pay-as-you-go model, customers can get life and health insurance for as little as 60 cents a month, paid right from their mobile airtime. And just think about this. 93% of their customers live on less than $10 a day.
But this next number, this is the one that really matters. For 75% of Bima's customers, this was the first time they had ever had insurance. Ever. Just take a second and think about what that means for a family that's facing a medical emergency or the loss of someone who provides for them. It's life-changing.
So in the end, the whole Insurtech story is really about two things. On one hand, it's about AI and data and the massive disruption of a multi-trillion-dollar industry. But it's also about something so much more human, using that same technology to bring financial security to people who have always been forced to live without it. And that leaves us with one final, really important question. As technology keeps rewriting the rules of risk, who else will we be able to bring in from the margins?